Ticker symbol DGRO, or the iShares Core Dividend Growth ETF, is by far one of the best dividend growth style ETFs across the entire stock market. Now, this is because this ETF gives you exposure to US stocks focused on dividend growth, but also some of the top names within this ETF have grown significantly over time, making many investors very rich off this one in the past. But in this video, we're going to dig a little bit deeper into this ETF, open up the hood and see exactly how it works and how it's done so well historically. Then later on, I'm going to share with you guys what would happen potentially if an investor invested $100,000 into this ETF, and stick around because the outcome of that is pretty crazy long term. So if you consider yourself a dividend growth style investor, make sure to stick around, drop a like down below, and let's get right into this one. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, just to back up for a second, DGRO once again is the iShares Core Dividend Growth ETF, and this is brought to us by iShares or BlackRock. Now, it says right here why DGRO. Number one, DGRO offers low-cost exposure to U.S. stocks focused on dividend growth. And we're going to talk a lot more about why dividend growth is so important and maybe one of the most important metrics when it comes to building out a long-term dividend portfolio later on. Number two, it says access companies that have a history of sustained dividend growth and that are broadly diversified across industries. Number three, it says use at the core of your portfolio to seek income. And the investment objective is the iShares Core Dividend Growth ETF seeks to track the investment results of an index composed of U.S. equities with a history of consistently growing dividends. Now, the crazy thing about DGRO to me is that this ETF is very dividend focused. It's focused on investing into stocks that offer dividend growth, which is all amazing. But on top of that, this ETF has offered investors massive capital appreciation all along with this. Now, looking at the performance of this ETF, this is insane. And this is why I say this is one of the best dividend growth style ETFs across the entire markets. And this is comparing this one to things like SCHD, VYM, VU, etc. On the 1 year, the total return for DGRO is 29.62%. On the 3 year on average, 10.29%. The 5 year average is 12.56%. The 10 year is 12.27%. And since inception, around 12%. So like I said, not only has this ETF offered massive income and massive dividend growth historically, but the ETF has grown in price also on top of that. Now, with any ETF, another important aspect of it is the expense ratio, and with DGRO, the expense ratio is just 0.08%, so it's very cheap to hold on to, relatively speaking. But this is really when the magic happens. The top holdings of DGRO, along with the other 400 plus different individual stocks that make up this one. With DGRO, you're not only going to be exposed to a very diversified basket of holdings, but some of the top names are massive dividend payers and also stocks that have grown a lot over the past several years. The top names are things like JP Morgan, we have ExxonMobil, Microsoft, Chevron, Apple, Johnson & Johnson, AbbVie, Broadcom, Home Depot, and Procter & Gamble. And honestly, one of my favorite breakdowns of a little bit of mix of income and growth within the top 10 holdings in DGRO. And I say this because some other dividend growth style ETFs might be offering a bit more income or a bit more growth, but DGRO sort of does a perfect balance of both of it. Now, to look into this ETF's performance, like we said earlier, it's averaged around 12% per year since inception, which is not bad whatsoever. The ETF used to trade at around $25 back in 2014. Now it's trading over $61 per share. So investors since inception have seen around 150% increase in ETF price, and that doesn't even include the massive dividends along the way. Now, speaking of dividends, 2.22% is the trailing 12-month dividend yield, so you are getting exposure to more income than that of like the S&P 500 or VU, but not necessarily as much income exposure if we were to compare this to something like SCHD or VYM. But still somewhere right in the middle, which is pretty fair considering there is so much growth potential with this one, along with the income on top of that. Now, this ETF talks a whole lot about dividend growth, so looking at some of the numbers on the trailing 12-month, 8.02% dividend growth rate, not bad whatsoever. The last 3 years, we have 9.6. The last 5 years, we have 8.98. And in the last 10 years, around 23% dividend growth. Now, looking at the graph, it's pretty obvious that investors historically have been getting larger and larger quarterly dividends over time with DGRO, which is obviously a bonus on top considering this ETF has grown like crazy as far as ETF price goes. But dividend growth is going to be a very important metric, especially in the context of this video, to see how much a $100,000 initial investment could compound later on over time. Dividend growth is going to have a lot to do with that. Now, to get into the actual numbers, what would happen exactly if an investor bought $100,000 worth of DGRO, invested an extra $100 per month on top of that, and did this for 30 years while reinvesting the dividends along the way? Now, again, these numbers are all just to be estimated. A 2.22% initial annual dividend yield is what we're using, a 9% annual dividend amount increase, which of course could be higher or lower in the future, 8% expected annual share price appreciation. Again, this could be lower or higher, who knows? But if an investor bought $100,000 worth of DGRO, this could potentially happen. So year number one, that $100,000 investment into DGRO is going to return an investor around $2,200 in dividends per year, because again, we're going off that 2.22% yield. But after the annual contribution and of course those dividends being reinvested, by year number two, we're already up to $111,000. Now this $100,000 investment is going to take some time to really grow, but what's crazy is that just within 8 years or so, the investment has already doubled to $205,000 and around $5,000 per year in dividends. Now the investment would be at $307,000 after 12 years, going off these numbers, with around $8,000 in dividends. And after 15 years, this investment would be worth over $414,000. And again, this is just with a initial principal investment of $100K. Now, after 20 years of buying DGRO and then reinvesting the dividends and letting the power of compound interest do its thing, this portfolio would now be worth just shy of $700,000 with over $18,000 per year in dividends. Now, 30 years down the road, just based off these numbers, and remember, these numbers are all just to be estimated, we're talking an ending balance of around $2,041,000 and around $54,000 per year in dividends. So I think it's fair to say that a relatively small amount of money invested into something like DGRO, if an investor has a long enough time frame, they could turn a portfolio into a relatively small one to a massive one if they just stay the course. Now, because the DGRO's historical performance, and pretty much for the reasons of what this ETF offers, giving investors easy, cheap exposure to some of the best dividend growth style companies across the world, I personally think that DGRO is an awesome foundational dividend growth style investment for any new investor out there. And I definitely also think that if you're in the initial stages of building out a long-term portfolio, look into the top 5, top 10 dividend growth style ETFs across the board. And I've made several videos about all of them. See which one's investment objectives fit the closest to your investment objective, and maybe go with that one. Now, what I mean by this is that some of these different dividend growth style ETFs, like I mentioned earlier, are going to offer more dividends. Some of them are going to offer a little bit more growth, but something like DGRO offers sort of a mix of both. So what's kind of cool about this is that whether you're an investor focused more on growth or more on income, there's a perfect ETF out there these days for everyone. So now that we talked about DGRO, I share with you guys how this ETF works and why I personally am so fond of it. I also share with you what a $100,000 investment long-term would turn into, potentially at least, into DGRO. I lastly, most importantly, want to hear from you guys down below. Do you personally own any shares of this one? Let me know yes or no in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.